we are running out of real estate and fast. Hi, everybody. Thanks so much for tuning in again. My name is Adam Nadler. I'm the owner of Vision Real Estate. If you are new to the channel, please hit that subscribe button below. Help support this community by also hitting that like button so this can be pushed out to more people like yourself. And if you have any questions about real estate or you just want to chat about the market, please feel free to click on the link in the description below. That'll connect you to a calendar where you can book a time to chat with me at a time that is most convenient for you. So new numbers have come out with the Toronto Real Estate Board, and it is showing a sharp decrease in supply relative to the actual sales that are happening. What does this mean for you? Well, when we look at supply, we actually look at it as a relational value to demand, and that creates what's called a consumption rate. In real estate, we refer to it as months of inventory. Basically, what we do is we take the total amount of supply and divide it by the amount of sales happening in any given marketplace. And on the Toronto Real Estate Board, as of right now, that is 1.4. And to give you an idea of what that number means, any number between 0 to 3 is a seller's market. Anywhere from 3 to 5 is pretty balanced, but anything over 5 is a buyer's market. And just to give you an idea, that number was a lot higher if we were to just rewind into the beginning of this year. In January of this year, we were at 3 months of inventory. And in February, that dropped steeply to 2 months of inventory. In March, it was 1.5 months of inventory. And now we're sitting at 1.4, which means that sales are gobbling up more inventory than we have coming onto the market to replenish it. In a nutshell, what this means is that if we got no new inventory coming onto the market, whether it was from a builder or from people just selling their homes, that we would run out of inventory, run out of real estate in the entire Toronto Real Estate Board, which covers a huge swath of area around the GTA and Toronto. We'd run out in about 6 weeks. These are the kinds of consumption rate numbers that we saw when the market was going bananas in Q1 of 2022 at the peak of the market. So what is going on here? Let's dive into the numbers to actually get a better look. Let's start with sales. Sales are shooting up like crazy. Although year over year, we are still down compared to April of last year, which was the peak of the market. So we're down 5.2% comparatively to then. But month over month, sales are up 27%. That is a massive increase in sales, and it really goes to show the confidence that consumers are having in the marketplace now that interest rates are holding steady. And this is, of course, affecting pricing. So, of course, we know March was the absolute peak of the market last year, but April was not far off. And in terms of price, year over year, we're only down 7.8% comparatively to the peak. But when we look at the month over month, we're up 2.4% in price. Now, in real estate terms, that's a huge jump. To jump up 2.4% as a broad average in pricing in 1 month is it's a big deal. Now, of course, we know that prices are affected by the supply and demand. So if we have low supply and high demand, it pushes pricing up. And we remember that back in the peak of the market in Q1 of last year, that supply was really low. But here's the thing. Compared to last year at the peak of the market of April in 2022, we are down 38.3% in total new listings year over year. Meaning, if you were shopping back then and you remember thinking to yourself, gosh, there's just nothing out there, I can't find anything. Well, it's going to look way, way worse this year when there is really nothing out there now. And this is affecting the sales to new listings ratio, which is up 23% year over year. These are massive numbers. It means that our consumption rate is far outpacing anything that is coming onto the market as new supply. So yeah, we're running out of real estate. And as inflation numbers keep dropping, which truth be told, I'm a little bit surprised at how quickly they're dropping and maybe somewhat skeptical as to how quickly they will continue to drop. Regardless, it means that the Bank of Canada is going to hold the rate steady for the foreseeable future. So if you've been waiting for some doomsday collapse of a market crash and pricing to sharply jackknife down, you might have to rearrange your expectations as to what's going to happen this year. So in my professional opinion, expect a very busy time for real estate moving into the summer and into the rest of the year, as long as things keep heading in this direction. But that's just what I think. Let me know what you think in the comments below. Do you think that we are going to see prices continuing to increase for the rest of this year? Thanks for watching, and I'll see you next time. If you like that video, click the subscribe button on the right, or feel free to enjoy another video here on the left.